Saving up for a down payment to buy a home is already setting aside a ton of money, but unfortunately, you're going to need even more than that because you've got to make sure that you can cover closing costs, which are a bunch of taxes, fees, and other expenses that you need to pay before they'll hand you the keys. And that's just when you're the home buyer. If you're the home seller, you have a whole other set of closing costs that you're going to have to pay. We'll get to all of it in this video, which covers closing costs and who pays what at closing time. Before we get too far, how much money are we even talking about? Well, that depends on whether you're the home buyer or the home seller. When you're buying a home, your closing costs are usually going to be between 2 and 5% of the amount of money that you're borrowing. So the home's cost minus your down payment. Yes, you do pay the down payment at closing, but it's usually not considered a closing cost. When you're the home seller, your closing costs are usually between 6% and 10% of the total price of the home, so everything that the buyer is paying. And that's an important distinction, that the buyer's closing costs are relative to the amount they're borrowing, the seller's closing costs are relative to the price of the home. To get a sense of how that works, let's look at an example. Let's say a home is being sold for $350,000 and the buyer is making a 10% down payment. Here's how the different closing costs would shake out. Since the home's sale price is $350,000, the seller's closing costs are going to range probably between $21,000 and $35,000. The buyer's closing costs are again based on the amount that they borrowed, so that's $315,000 because we're subtracting their $35,000 down payment. That puts the buyer's closing costs at between $6,300 and almost $16,000. The total amount of money that they'd bring to closing, so the closing costs plus the down payment, are going to range between about $41,000 and $50,000. That sounds like a whole bunch of money, so where is all that money going exactly? Let's start from the point of view of someone who's buying a home. If you're a first-time home buyer, you're actually saving up this money separately, so you definitely want to know where the money goes. If you already have owned a home, there's a good chance that you're going to be able to use some of the proceeds from your home sale to pay the closing costs on your next property, so you might not feel the pinch from these as much. In any event, what are the different closing costs that you might have to pay as a home buyer? The loan origination fee is a big one. This is often about 1% of the total amount you're borrowing. It's basically the money that the lender is charging you to give you a mortgage, and you really, unfortunately, cannot get around it. There's the appraisal, which is usually a couple $100, and it's what the lender uses to make sure that your home has the value that they think it does. There's the home inspection, which is you covering yourself, making sure that you're not buying a house that has things that are really wrong with it or things that aren't working. There are all kinds of fees that come with buying a home. These include recording fees for like updating local town and county records and stuff like that. There are tax fees, there are flood zone determination fees, so figuring out whether or not the home is in a flood zone and if that's changed, and all of those can really add up. There are also a lot of fees associated with the home's title, which is basically a document that keeps track of the home's ownership, and you get all the title stuff just to make sure that no one can show up later claiming that the house is theirs and that you don't really own it. Depending on what state you're in, you might also have a real estate attorney handling some of that stuff, in which case you are going to be paying the real estate attorney's fees as well. You can use a closing cost calculator to try to estimate how much your closing costs might be if you're buying a certain amount of house, but when you actually apply for a mortgage, you'll get a very detailed look at what your closing costs will be, because within 3 business days of your mortgage application being submitted, the lender has to supply you with a loan estimate. This is a standard form that all mortgage lenders are required to use, and it spells out estimated costs for every single little item that will be part of your closing. It also splits them up depending on whether there's something where it's just, this is how much it costs and you're just gonna have to pay it. And then the things where you could actually, shop around a little bit, do some comparisons, maybe save a few bucks. Then, no less than 3 days before your actual closing, the lender supplies you with an updated version of this form, and this one's called the closing disclosure. This one gives you the real numbers, since now all those things have already happened. It's not just estimates, and they know either what things cost or what they're going to cost. And you can actually look at a section of this form and see a comparison of what did the loan estimate say the closing costs were going to be, and then what did they actually turn out to be. And you'll likely find that while some of them went up, some of them may have gone down since you got that initial loan estimate. The closing disclosure is important because it lets you know how much money you actually need to bring on closing day, though note that no one is bringing actual money. This is not like a suitcase full of cash situation. Depending on whoever is managing your closing and what they want, usually you'll bring a cashier's check or it will be a wire transaction. The money also pretty much never goes directly to the seller. It almost always goes to a neutral third party so that it's held in escrow while the transaction is actually being completed. It seems like the buyer pays for an awful lot. So where is that 6 to 10% of the purchase price that the seller is paying going? Well, a lot of it's going to the real estate agents involved in the transaction, because as this part of the closing costs, the seller pays for both the buyer's agent and their own agent. So right there, that's often 6% of the purchase price of the home, with 3% going to each of the agents involved on both sides of the sale. Sellers also usually have to pay their part of whatever portion of the month they still own the home. They need to do that prorated per diem payments toward the property taxes, insurance, and all of that kind of stuff. And then there are a couple of other fees that you might or might not incur, and it depends mostly on where you live and not always what the law is. Sometimes it's just what's customary in a given area. So it's something that you can ask your real estate agent whether you should expect this as a home seller. In some places, it's customary that the seller pays the transfer taxes and fees, and also that they pay for the part of the title insurance called the owner's policy. Again, depends on where you live, and really paying all those real estate agent commissions is going to be the biggest part of it. The only kind of good news of paying closing costs as a seller is that usually that money just comes directly out of whatever profit that you were making from selling the home. So you don't necessarily feel the pinch from those closing costs because it's just money that never hits your bank account. What are some ways that you could potentially lower your closing costs? As the buyer, you can shop for the stuff that the loan estimate tells you that you're able to shop for and compare, but be aware that because those are services that can take time, you don't want to hold up your closing. So you need to get out there and find a home inspector, find a title company, all that stuff you can shop for, do it as quickly as possible. Also, if you're a buyer and you've applied for a mortgage with more than one lender, you can compare their loan origination fees, and if one is lower, you could try to get the other lender to match that origination fee. Hard to say if they'll be willing to do it, but you won't know unless you ask. Speaking of you won't know unless you ask, seller concessions. As the buyer, you could try to get the seller to pay for some of your closing costs. It really depends on what kind of market you're in, and that's something where your real estate agent can really come in handy. They can let you know what's customary in your area and also what's been going on lately, what they've seen, and what sellers are used to. When it's a really hot market and there's a lot of buyers out there competing, sellers probably aren't going to be willing to offer you much help. But if you're in a market where buyers have a little bit more of the upper hand, you may be able to get the seller to foot the bill for at least a few items and shave a little bit off your closing costs. No closing cost mortgages do exist, but these are sort of the free lunches of the mortgage world, if you will. There's not really such a thing as a no closing cost mortgage. You are still paying those closing costs. You're just paying them in a different way, not all on closing day. So while you don't need to save up that money just to close on the home, you are definitely going to be paying closing costs at some point. Usually the way this is done is adding the closing costs into the total mortgage amount. So that means that your loan is larger and also you're paying interest on the amount of the closing costs. Another thing that you'll sometimes see with no closing cost mortgages are loans where instead of paying the closing costs up front, you agree to take a higher interest rate. That can also get really costly because then you're paying more over the life of the loan because you have more interest to pay. One that you can do, whether you are a buyer or a seller, is simply trying to time the closing. We talked about how there are all those different prorated per diem costs. So depending on whether you're the buyer or the seller in the transaction, you might want to try to time the closing so that you're paying for fewer days of the month than the other party is. So if you're the seller, you're looking to have the closing be early in the month so that you're paying for just the first couple days of the month and then the buyer's got to foot the bill for the rest of it. If you're the buyer, you're trying to time the closing so that it's as close as possible to the end of the month so that the seller has to pay for most of the month and you only need to do the last couple days. When you're buying a home, your biggest payment is still going to be your down payment, but the closing costs are nothing to sneeze at. They might be $100 here and $200 there, but they add up to thousands of dollars. It's important to be aware of them ahead of time so that you can save up and so that your home buying budget can accommodate them. That way, when you finally find a house that you love and you're ready to make an offer, you'll know that the closing process will go that much more smoothly. I'm Kate Wood, and I write about mortgages and homeownership for NerdWallet. When I bought my home, I was pleasantly surprised to find that a bunch of my closing costs had gone down from the loan estimate. But since I closed near the beginning of the month, I was hit pretty hard with the per diem stuff. Hopefully, I've helped you learn how you can avoid stuff like that, and so maybe you could like or subscribe.